lacklustre one, but lots of data to absorb.
Lots of data to absorb, and we managed to finish on a high. And I guess around the region, the major piece of data was out of China, where we did see inflation as well as the producer price index numbers. And inflation in particular was in focus. We did see the numbers coming in below expectations at 2.5% for the month of December. That was below expectations of 2.7% and represented a drop from 3% in the month of November. So altogether, that was shown as signalling that the demand from China still remains quite lackluster, and we did see markets around the region selling off. Retail sales was the focus here domestically, and we did see a rise better than expected, but the retailers were actually a little bit slow to react. We did see clothing, footwear, personal accessories actually reaching the highest level that we've seen since 2009. And Premier Investments, while it was down 2.1% a couple of hours after the data dropped, in the end it was actually up by 0.1%. Even the department stores saw a reversal, even though department stores did see a decline of 2% seasonally adjusted for the month of November. Myer was down 1.6% during the session but finished up 0.4%, and David Jones was down 0.5% during the session but managed to finish up 1.3%. So all in all, I think it was a positive event to the market, and you can see that from the intraday graph. Just on the close, we managed to jump up around about 10 points, finishing on the high of the session. So altogether, it does look like there was some buying of the whole market just coming into the close of the session today.
View on this, because we did obviously see the shares rally off this. Was this a surprise?
This is a bit of a surprise. We did see Qantas shares up by 1.8%, even though we did see this downgrade coming through from Moody's. And of course, this downgrade is bad news for Qantas, because it means that borrowing costs will be rising at a time when its business is coming under pressure. It's quite unusual to see a two-notch downgrade, but that's exactly what we've seen from Moody's. But probably not a huge surprise, given that we have seen Standard & Poor's cutting Qantas from investment grade down to junk status just a month ago. This, of course, was on the back of that profit downgrade, where Qantas did say first half underlying loss is expected to be between $250 to $300 million. And of course, that's concerning, because generally the second half of the year does typically signify the weaker half for Qantas. So it could signify that we're in for an even weaker second half of the year. The problem with Qantas is not only has it been struggling on the international business front, where it is struggling to get back to profitability, but on the domestic front, what we've seen from Virgin is Virgin has been increasing capacity, while Qantas has frantically been moving to try and maintain capacity. And in the past, Qantas had a very strong balance sheet, and this was crucial because the airline industry is a capital intensive industry, so to have a strong balance sheet really gave Qantas an advantage. But of course, with Virgin, with its alliances with a number of different airlines and the capital raising that it's done, it's really eaten away at that advantage that Qantas has had. So Qantas shares up by 1.8%. I think there were a few things happening there. One is a possible intervention by the government to reduce the borrowing costs of Qantas, which signifies upside risk for Qantas shares. And secondly, not wholly unexpected, given that Standard & Poor's downgrade a month ago.
And Virgin may be taking some market share, but would you want to buy into it, Julia?
I think both these airlines are struggling in Australia at the moment, and you can see that from the share price action. We're seeing Qantas shares down 28% over the past year, and Virgin shares down 9%. Now, if you compare that to a company like Air New Zealand, which is actually increasing capacity in New Zealand and targeting Asian routes, it's also spending more in terms of capital expenditure with the Boeing Dreamliner 9s and spending money to increase capacity. It's a much more positive story, and of course a much more positive share price performance. I think Air New Zealand's up around about 40% in the past year compared to Qantas as well as Virgin, which are actually down. So I'd probably prefer to be exposed to the airports at this stage rather than the airlines. The airlines are still a very difficult space, lots of competition, and as we've seen with Qantas, it is a very competitive and difficult space to be in.
Julia, SRX and XRO continuing to soar. SRX soaring actually 16% yesterday, and another, I think, 9% today.
We did see Certex continue that great run which started yesterday, and in fact the shares reaching an all-time record high. We've never seen the shares trade this high before, and yesterday it was on the back of those second quarter growth numbers coming through. And if we have a look at Certex, it's an incredible story. It's selective internal radiation targeting liver cancer, and really what this means is the radiation that comes from this treatment, there's very low radiation that targets healthy tissue. Now usually this is used in the late stages of liver cancer, but at the moment what we are seeing is a trial going on, Surflox, which is trying to have a look at clinical results which support the use of it in early stage treatment, and of course that would be a game changer for Certex. So yesterday we saw the shares rallying on the back of those second quarter sales numbers, which were very strong, up by 18.7%, but I think the story could become even better around about April this year once we do start to see the interim results of that trial coming through. In the case of Xero, really there's not much of an explanation here, but the shares also reaching an all-time record high. This is a cloud-based accounting company, and really what it allows you to do if you're on the run, let's say you're a landscaper and you've just completed a job, you're in the car, you're in the ute, you can write out an invoice, send it through, and really the whole process is automated into the cloud. So it is an interesting story, and of course they're trying to expand into the US, which is a huge market, but the valuations are so stretched at this point. It is one of the top performers of the year so far. It's only the 9th of January, and in the year to date so far, the stock's actually up 20%.
Yeah. Hey, just back on Certex, it's up about now 25% just in the last couple of days. Speaking of valuation, is it getting too rich, do you think? Would you still buy in? I mean, I know you say it might improve by April, so would you buy in now?
I think we are seeing a lot of buying at the moment, a lot of interest, and that's because Certex, if we have a look at what happened last year, there were a couple of quarters where we did see some lackluster growth coming through. So the fact that we're back to double-digit, high-teen growth, I think is a huge positive for Certex because it's really under-penetrated in its major markets, and it's getting a lot of its growth at the moment from Americas and the Asia-Pacific, but it hasn't even penetrated a 5% potential of that market. So it still has a huge area to grow in, and of course if we do see these clinical trial results coming in positive, that could be a game changer for Certex. On the flip side, if the clinical trial results aren't so good, then that could be a huge negative as well. So it is an interesting story, it's a great story, and it's been one of those success stories on the Australian market in that biotech space over the last 5 years, but it does look like it is garnering a lot of positive momentum and a lot of support.